Hello dear students, this video is my 8th video for the chapter Final Accounts of Companies. Before you proceed to watch this video, I will suggest you to watch my previous 7 videos for this chapter. This will enable you to understand the contents of this particular video better. I'll be providing the link for those videos in the description. In the video which I am going to post today, I am going to work out a very interesting problem involving a number of adjustments. This problem involves the preparation of the profit and loss statement as well as the balance sheet. Let me proceed further. I will read the problem first. A limited company was registered with an authorized capital of rupees 30 lakhs in equity shares of rupees 10 each. The following is a list of balances extracted from its books on 31/12/2024. Purchases 9,25,000. Wages 4,24,325. Manufacturing expenses 65,575. Salaries 70,000. Bad debts 10,550. Directors' fees 31,125. Debenture interest paid 45,000. Preliminary expenses 25,000. Calls in arrears 37,500. Plant and machinery 15 lakhs. Premises 16 lakhs and 50,000. Interim dividend paid 1,87,500. Furniture and fittings 35,000. Sundry debtors 4,36,000. General expenses 84,175. Stock on 1/1/24 3,75,000. Cash in hand 1 lakh. Goodwill 28,750. Cash at bank 1,99,500. Subscribed and fully called up capital 20 lakhs. Profit and loss account credit 72,500. 6% debentures 15 lakhs. Sundry creditors 2,90,000. Bills payable 1,67,500. Sales 20,75,000. General reserve 1,25,000. You are required to prepare statement of profit and loss for the year ended 31/12/2024 and the balance sheet as on that date after making the following adjustments. Depreciate plant and machinery by 10%. Provide half year's interest on debentures. Also write off preliminary expenses and make provision for bad and doubtful debts of rupees 4,250 on sundry debtors. Stock on 31st December 2024 was rupees 4,55,000. Provide corporate dividend tax at 17%. So this is what is the problem you have. As you can very well see, this is a problem in which you have been asked to prepare the statement of profit and loss and also the balance sheet. And the problem involves a number of adjustments. So let us proceed with the solution now. But before we proceed with the solution, as I used to tell you always, in this particular chapter, you can work out the answers correctly only if you are thorough with the format of the statement of profit and loss and the balance sheet. So before you proceed to watch the answer for this particular problem, I will suggest you to watch my videos, Final Accounts Part 1 and Part 2, in which I have very clearly explained the format of the statement of profit and loss and the format of the balance sheet. Let me proceed with the solution now. So first we will be preparing the statement of profit and loss, and after that only we will be preparing the balance sheet. And when we start with the preparation of the statement of profit and loss, first we have to prepare the notes to accounts. If you can recollect the format of statement of profit and loss will have 7 different notes, and in that note 1 and 2 are notes relating to incomes, and notes starting from 3 to 7 will be notes relating to expenses. So note 1 usually will be for revenue from operations, and note 2 will be other income. So note 1 plus 2 will give you the total of revenue, and then note 3 is for cost of materials consumed, note 4 is for employee benefit expenses, note 5 is for finance costs, note 6 is for depreciation and amortization expenses, note 7 is for other expenses. So starting from note 3 to 7 will be expenditure notes. You will be adding all this, which will give you the total of expenses. Then from the total of revenue, you will be deducting the total of expenses, and that will give you the profit. So this is how we will be doing the answer. Now let us start with the preparation of the notes to accounts. The first one we have is note 1. These are the notes relating to the statement of profit and loss. Note 1 is revenue from operations, under which always will be having sales. So if you have a look at the problem, you can just see how much is given as sales. Sales is given to you as 20,75,000. So this is the item sales 20,75,000. So this 20,75,000 will be entering here. So note 1 revenue from operations will be 20,75,000. Okay. And one important point I should tell you here, which you have to always bear in mind, all those items which are given in the main information of the problem will affect your financial statement only once. Okay. Which means these items which are given in the main information will come either in the statement of profit and loss or in the balance sheet. But when you take the information given in the adjustment, you are given a following adjustments, isn't it? So under the following adjustments, you are given a list of adjustments. So whatever is given under adjustment, it will affect your financial statement twice. That is, it will come once in the statement of profit and loss, and again one more time in the balance sheet. Okay. So this is one important point you have to bear in mind. So now we have started preparing the notes. Note 1 is already over. Note 2 is for other income. So we have to see whether we have any item relating to other income here. Actually, under other income, we'll be having items like interest received, dividend received, and all that. As far as this problem is concerned, we don't have any interest received, we don't have dividend received also. So, note 2, other income will be nil. Okay. Now let us proceed with note 3, cost of goods sold. I hope you all will know how to find out the cost of goods sold. Actually, cost of goods sold is equal to opening stock, add purchases, less closing stock. Okay. So let us see how much is given as opening stock in the problem. The stock that is available to you in the main information is the opening stock. The stock which is available to you in the additional information is the closing stock. So in main information, you are given stock on 1/1/24, isn't it? So this stock is the opening stock, and the amount given to you is 3,75,000. So let us enter opening stock 3,75,000. With that, you will be adding purchases, then you will be deducting the closing stock. So let us see how much is given as purchases. The very first item itself is purchases only. Purchases is 9,25,000. So with opening stock, let us add purchases 9,25,000. So you will be getting 13 lakhs. Okay. From that, you have to deduct the closing stock. So closing stock is a stock which is given in the adjustment. Closing stock that is given in the adjustment is 4,55,000. So this has to be deducted. Closing stock 4,55,000. You have to deduct 4,55,000 from 13 lakhs. So how much will you get now when you deduct 4,55,000 from 13 lakhs? You will be getting 8 lakhs and 45,000. 8 lakhs and 45,000. So 8,45,000 will be note 3, cost of goods sold. Then note 4 is for employee benefit expenses. So all those expenses which are incurred for the benefit of the employees will come under this heading, this particular note. So let us see what are the expenses relating to the benefit of the employees. So we have items like wages, salaries, etc. So first we'll be taking wages. Wages is 4,24,325 and salaries is 70,000. So these two items will be entering under note 4, employee benefit expenses. Wages 4,24,325 and salaries 70,000. So let us add these two amounts together. So you'll be having 5, then 2, 3, 4, 9 and then 4. 4,94,325. This will be the total of note 4. Then we have note 5. Note 5 is for interest on debentures. As far as this debenture interest is concerned, you are already given some debenture interest in the main information. Let us have a look at the problem. Just have a look at the problem. You are given debenture interest paid. How much is that? It is 45,000. In addition to this debenture interest paid, we have outstanding debenture interest given in the adjustment. So have a look at the information given under adjustment. You are given provide half year's interest on debentures. So this half year's debenture interest is outstanding, which has to be added with the debenture interest which is paid already. Okay. So let us see how much is the debentures we have. In the problem you are given this amount, 6% debentures. 6% debentures is given as 15 lakhs. This 6% represents the rate of interest. And for how many months it is outstanding? Half year it is given as half year. Half year means how many months? 6 months. So we have to calculate outstanding debenture interest for 6 months. So let us do it now. Under finance cost, interest on debentures, this is what is already given as paid. Okay, interest on debentures paid is 45,000. Add interest due, that is outstanding. This is the outstanding amount. This is outstanding for how many months? It is outstanding for 6 months. The amount of debentures given to you in the problem is 15 lakhs. Okay, and you are given 6% debentures. So that is the rate of interest. So 15 lakhs into 6 by 100. Half year it is given, isn't it? So which means 6 months. 6 months debenture interest is outstanding. So it will be 6 by 12. So calculate this and see 15 lakhs into 6 by 100 into 6 by 12. That will give you 45,000. So when you add these two amounts together, you will be getting 90,000. So note 5, finance cost will be 90,000. Then next we have note 6 for depreciation and amortization expenses. So let us see what is the information we have in the problem relating to depreciation. You are given depreciate plant and machinery by 10%. This is the sentence we are having. Depreciate plant and machinery by 10%. So let us see how much is plant and machinery according to the problem. So this is what is plant and machinery we are having. Plant and machinery It is 15 lakhs. On this we have to calculate depreciation. Okay. How much is depreciation? 10%. So 15 lakhs, 15 lakhs into 10 divided by 100 will give you 1,50,000. And if you have any preliminary expenses written off, that will also come under Note 6 depreciation and amortization expenses. So what is given as preliminary expense? You are given in the adjustment also write off preliminary expenses. Also write off preliminary expenses. So let us see how much is given as preliminary expenses in the problem. Have a look at the problem. So you are given preliminary expenses. Here we have, it is 25,000. So this amount has to be written off now. So this is 25,000. Preliminary expenses written off is 25,000. So when you add these two amounts together, you will be getting 1,75,000. This will be Note 6 depreciation and amortization expenses. Then Note 7 is for other expenses. All those expenses which did not come under Note 3, 4, 5, 6 will come under other expenses. So we'll be getting items like bad debts, manufacturing expenses, general expenses, director's fees and all that. So as I told you already, you have to be very, very thorough with the format and you should know which item will come under which note, which item will come in the statement of profit and loss and which item will come in the balance sheet. Only if you are thorough with all that, you will be able to do the answers correctly, okay? So we have items like, you can refer the problem, we have items like bad debts, manufacturing expenses, general expenses, director's fees, all these are available in the problem. In addition to all this, all those information are given in the main information. In addition to all this, you are given in the additional information, make provision for bad and doubtful debts 4,250 on Sunday debtors. So this again will come under other expenses. Provision for bad and doubtful debts given in the adjustment 4,250. I already told you whatever is given in the additional information will come once in the statement of profit and loss and once in the balance sheet. This 4,250 when you prepare the balance sheet will be deducted from sundry debtors in the balance sheet also. So it will appear also in the balance sheet. Okay. So these are the various items which will come under other expenses. You will be having bad debts, manufacturing expenses, general expenses. See the problem? So in the problem you have those items, isn't it? This bad debts, then director's fees, general expenses. All these items will come under other expenses. This manufacturing expenses. So that's what, as I told you, all those expenses which will not come under note number 3 to 6 will come under note number 7, that is other expenses. So let us find out the total of this other expenses now by adding all these amounts together. So when you add all these amounts together, here you will be getting 5, then 7 to add and see, then 6, again 5, 9, 1. 1,95,675 will be the total of note number 7. So we have prepared 7 notes starting from note 1 to note 7, where I already told you note 1 and 2 will relate to income. Okay, and starting from note 3 to note 7 will relate to expenses. Okay. Now we have to take all this to the statement of profit and loss. So let us proceed with the statement of profit and loss. So give the heading a statement of profit and loss. Actually, if you have the company's name, you can give the name of the company also. So the heading will be statement of profit and loss. What is the name of the company in this particular problem? You are given a limited company. So you can just write statement of profit and loss of a limited company. Of a limited company. Okay, usually you will be writing for the year ending, whatever year is given, that can be mentioned there. Now let us take the items which we have prepared, notes which we have prepared already to the main statement. How much is note number 1? Just see the problem. Note 1 is 20 lakhs 75,000. That is revenue from operation. And note 2, other income is nil. So let us enter these two. Note 1, revenue from operation 20 lakhs 75,000. Note 2, other income nil. The total will be 20 lakh 75,000. This is total revenue, which is nothing but 1 plus 2. Now let us continue with the expenses. Under expenses, we have note 3, which is for cost of goods sold. So let us have a look at the note relating to this. How much is cost of goods sold? This is note 3, cost of goods sold. It is 8,45,000. So 8,45,000 will come here. Note 3, cost of goods sold 8,45,000. Then the next note we have is employee benefit expenses, that is note 4. Employee benefit expenses note 4, the amount is 4,94,325. So let us enter that 4,94,325 employee benefit expenses, and we have already prepared note 5 for finance cost. So how much is note 5 finance cost? It is 90,000, this amount. So note 5 finance cost is 90,000 and note 6 depreciation is 1,75,000. So let us enter these two amounts. Note 5 finance cost 90,000. Note 6 depreciation and amortization expenses 1,75,000. And then the next note we have is note 7. So note 7 is other expenses, isn't it? So how much is other expenses? It is 1,95,675. So let us enter other expenses 1,95,675. So now you have to add all these amounts together. That is all the expenses together you have to add. So total expenses. So what do you mean by total expenses? Total expenses is the total of note 3 plus 4 plus 5 plus 6 plus 7. Okay, the total of all these notes will represent the total of expenses. So let us start doing the total. 0, 0, 0 again. Then here also you add and see. Here also it will be 0. You will be having 8 and 1. 18 lakhs will come. Okay. This 18 lakhs is what exactly? It represents the total of expenses. Okay, total expenses. Now, let us see what is profit before tax. Profit before tax is nothing but A minus B. What is A? A is total revenue. It is this 20 lakh 75,000. And what is B? B is total expenses. It is this 18 lakhs. So 20 lakhs 25,000 minus 18 lakhs is A minus B. Total revenue minus total expenses will give you 2 lakh 75,000. And if you have any current tax, okay, that has to be deducted here. But you don't have any tax given for that particular year now, for the present year actually. So current tax is not available. So you write current tax nil. So profit before tax is 2 lakhs 75,000. And since there is no tax, profit after tax will also be the same 2 lakh 75,000 only. So this amount of 2,75,000 we'll be taking to the balance sheet and we will show under the heading reserves and surplus when we prepare the balance sheet. Okay. So this is how you will be preparing the statement of profit and loss. So first what did we do? We prepared all the notes relating to the statement of profit and loss starting from note 1 to note 7 and finally we posted them in the statement of profit and loss and we arrived at the answer that is profit as 2,75,000. I hope you are able to understand this clearly.
Dear students, I worked out only the statement of profit and loss for this particular problem. I'll be working out the balance sheet for this problem in my next video. Because if we work out the balance sheet also, the video will become too lengthy. I hope you are able to understand the statement of profit and loss very clearly. Please don't forget to give your comments. If you like this video, subscribe to this channel and share it with your friends also. Thank you very much for watching this video.